about veteran affairs loans, VA loans. What are they all about? How do you get one? What's the criteria for getting approved? What's the great deal about it? How much can you put 0% down? You might have heard. What kind of credit scores do you need? And all that kind of good information. Okay, so, let's get started. So, a VA loan is a really great loan option if you meet the criteria. And as you may or may not know, VA stands for Veteran Affairs. So a VA loan is basically backed by the Department of Veteran Affairs. And then the first thing you need to do if you find out if you actually qualify for a VA loan is you need to have done some kind of military service. So either the qualifications usually run along the lines of 90 days of active service, wartime service that is, or 180 days of inactive service. And there are other, qualifications such as being a survivor, the surviving spouse of a military member that's not married. So there's things like that. And before we go any further, first I do want to say, any veterans that are watching this, I want to thank you for your service, all that you do for us, fighting for our freedoms. And secondly, I have to put out a disclaimer, is that this video is for informational and educational purposes only. So, to get completely accurate information, you're going to have to talk either to a lender or, go talk to, the Department of Veteran Affairs, because, things might have changed since I'm making this video in terms of criteria and things of that nature. So, but if you like the information contained in here, hey, do me a favor, hit the like button, hit the subscribe button, stay tuned for more videos, and I'm really happy to get you the information, just as educational purposes. So, one thing about a misconception that people often have about a VA loan is, that they think they might meet the criteria because they've done some kind of military service. But actually, in order to apply for a VA loan and get the benefit of a VA loan, which we're going to go into in just a minute, you have to have a documentation. You have to have certification, a document that certifies you are eligible to get a VA loan, the benefits of a VA loan. And the way that you can do that, if you go to a mortgage professional, a lender, they can help you do that, or you may have to go to the VA, website, talk to someone, and they can help you do that. So the one thing just to say in that respect too is don't go through the whole process of getting a VA loan without that documentation that says you're certified, because you might actually get a deal going, get a property, make an offer and get it accepted, and then find right out at the end, oh, what? I'm not eligible. I don't have the certification, and you can't get approved at the end. So make sure you take that really first important step. Get your certification letter that shows you're indeed eligible to get a VA loan. So, the main benefits of a VA loan are, you may have heard that, often you can put 0% down. There's no down payment required with a VA loan. And the next question people often ask, well, how much for? Is that just for a small loan, or, can I get any amount? Well, actually, I know there's people that have gotten, properties of value up to over $1 million, even $1.5 million, putting 0% down. And so, that's an awesome deal. So they call that 100% financing. That's one of the main benefits of a VA loan. And the other thing is, they're maybe a little more lenient in the credit scores, but we're going to go over that in a little bit, and also debt to income ratio. So we'll go over those in a little more detail in the video in just a minute. Talking about a VA loan, that's really important if you are a veteran and you're looking to get a loan for yourself, or you're a surviving spouse of a veteran and you're eligible, is, the question that I've had sometimes, people say is, oh, well, I saw an advertisement online from a credit union saying, they support veterans with VA loans, and is that where you have to go to get a VA loan? And well, you can, for sure you can, but that's not the best place necessarily to get a VA loan. And just to give a little disclaimer again, just a VA loan, the best place to get a VA loan is from, a certified loan specialist or mortgage specialist, a lender specialist, and not necessarily from the credit union that's advertising, because a lot of those places are not part of the VA department. They're not part of the Department of Veteran Affairs. They're just private companies. They're for-profit companies, credit unions or whatever else, that are trying to get your business, and they may not even give you the best terms. In fact, sometimes they're known for kind of ripping you off. So I'm not, of course, I'm not mentioning any names or anything that here, but just giving you a heads up. Be careful. When you're looking for VA loans, it's not just that you don't have to go to a specific credit union. You don't have to go to a specific bank to get your VA loan. You can go to any lender that's willing to, work with veterans and get you a VA loan. If the main thing is you get your letter of eligibility, and then what you want to do is just go to a certified loan specialist who works with a whole bunch of lenders, and they will know, lender A, B, and C over here, work with veterans and do veteran VA loans. So that's what you want to do. Now, if you don't know anyone like that, hey, click the link below, and I'm really happy to give you a referral. And again, a heads up, this is not anything I'm doing out of monetary benefit to myself. This is simply for your benefit. I'm not tied in. I'm not a mortgage specialist myself. I'm actually a licensed real estate agent. And so, I don't have anything to gain except, it's important to educate people about how the whole process works. And a good real estate agent is going to be able to educate you about the process. So that's what I'm doing. This is, like I said, it's about education primarily for you. And so if you need some help, I'm happy to do that. Give you a referral, set you up with a lender, or at least give you a referral of a number of good lenders that I know, like, and trust. And they're the three key words. You want to find someone, who can refer you to a lender that they know, like, and trust. So click the link below, and I'm happy to do that for you. So, that's the first main thing. And then the next thing after that is, let's talk about the whole main benefit of the VA loan is regards to the down payment. And, VA loans are available with 0% down. What that means is you don't have to put a down payment, when you purchase a property, which is really a great deal for many people. It really helps them get into the housing market. Now, that being said, some people do choose to put a down payment even with a VA loan. And why would you do that? Well, you could do that because, let's just use an example. Let's say you're buying a $400,000 home and you don't put anything down, 0% down, then you're going to have to get a loan amount for the full amount of that property, which means your mortgage payment's going to be reflected in that. Now, let's say you put 10% down, that would be $40,000 in this case. Now you're only going to have to get a loan for around $360,000. So obviously your mortgage payments are going to be less. So, that's kind of obvious, but it's worth saying, and it's important to say that if you can put a down payment down, it's a good thing to do. And also it does actually make your offer look a little more attractive to a potential seller of a home. And, having talked about that, so, you can just put 0% down if you want. And then the other thing that goes along with down payments in, say, for example, conventional loans and FHA loans, is what's called mortgage insurance. So let's just look at, say, a conventional loan. If you put less than 20% down in an FHA or conventional loan, which in a $400,000 property, 20% down would be $80,000. If you put less than that down, you're required to take out what's called mortgage insurance. Now, that's separate from homeowners insurance. You're also required to do that. Homeowners insurance is obviously, you buy a home and it's in case of a natural disaster, a flood or a fire or, a tornado or some crazy, natural disaster comes and wipes out your house. Your homeowner's insurance is going to effectively rebuild your house and restore the value of your home. Now, that's separate to mortgage insurance. Mortgage insurance is for the lender when you're using a lender to finance the purchase of the home. So if you put less than 20% down, you're required to take that mortgage insurance which is going to be in addition to your homeowner's insurance. So that's two insurance policies you're going to have if you're putting less than 20% down: homeowner's insurance and mortgage insurance. Mortgage insurance is for the lender, and what that basically is about, it's a policy that if you put less than 20% down, it's kind of a signal to the lender that maybe, there's a chance you might default on the loan, or you may not be able to come up with the monthly payments. And in that case that you do default on the loan and you stop paying the loan back, that insurance covers them to recover the monies, the insurance, the payments that you were supposed to be making. So that's what mortgage insurance is all about. But here's the good news: in a VA loan, there is no mortgage insurance. So that's a big difference between a VA loan and an FHA loan and a conventional loan. So they're the three main types. And if you're not sure what FHA loans or conventional loans are about, hey, I'm going to put a link above right now for FHA loan. And so if you're not sure what that's about, check that link. And then following that link, I'm going to put a link for conventional loans, so you can check out that link too. So if you're unsure about either of those, check those links out above. But that's one real big key difference and a benefit of a VA loan is there is no mortgage insurance. It doesn't matter if you put 20% down, 10% down, or 0% down. In a VA loan, you are not required to come up with any mortgage insurance. So that's a really good deal. What that means is obviously, therefore, your mortgage payment is going to be less, because when you are required to take out mortgage insurance in an FHA loan or a conventional loan, it means obviously that your mortgage payment's going to be a little bit more. Let's say you're just paying $1,000. We'll just use round numbers. Let's say your mortgage is $1,000 a month, and that includes your principal and your interest, your taxes, and your insurance. They call that PITI, principal, interest, taxes, and insurance. That's $1,000 a month. Well, on top of that $1,000 a month, now you're going to have to come up with some mortgage insurance. That might even be as high as $200 in some case, or even more. It might be. So now suddenly your mortgage payment's gone up to say $1,100 from $1,000. Just because you have that extra insurance premium on. In a VA loan, you don't have that premium, so that's a really good deal. Having said that, though, there is a fee for a VA loan that's called a funding fee. And the funding fee, what that's about, and there are some exemptions which I'll go over in just a second, but the funding fee is given that a VA loan is basically backed by the Department of Veteran Affairs, so it's a government-backed loan. And so basically taxpayers are paying for the loan. And in the case of, a number of people, let's say a bunch of people, which happens, of course, take out VA loans and they're unable to complete their loan, they default on the loan, so there are costs involved in that. So it's kind of like, mortgage insurance without technically being mortgage insurance. But like I said, there are exceptions. Firstly, if you have a disability of more than 10%, you don't have to pay a funding fee. And so that's a really good deal. So then the funding fee has a number of rates that depend on how much of a down payment you're putting down. And it basically goes like this. If you're putting more than 10% down, you're going to pay a funding fee of 1.4%. If you're putting between 5 and 10% down, it goes up a little bit. It goes to 1.65% funding fee. And if you're putting between 0 and 5% down, you're going to be paying 2.3% funding fee. And so what does that mean? Well, let's say you're putting 0% down, which most people do when they're using a VA loan. So now you're putting 0% down, you're going to have a 2.3% funding fee. Let's just use some round figures. What does that mean? Let's say you're buying a home for $100,000. So what happens now is the funding fee, 2.3%, is $2,300. So you're taking out a loan for $100,000, but that loan now becomes, you get an additional $2,300. So now your loan amount technically becomes $102,300. So that's how it works. If you're taking out a loan for $200,000, well, 2.3% of that is going to be $204,600. $100,000 home VA loan, what's 2.3% of 300,000 is 6,900. So your loan amount for a $300,000 VA loan, your actual loan amount you're going to be paying back is going to be the 300,000 plus the 2.3%. So it's going to be $306,900. And then let's go into the next area of requirements, and that is your credit score. And if you're not sure about credit scores, and check this link out above where I go into credit scores, down payments and mortgages. I go into talking about how you can improve your credit score, what you can do. Credit scores is a big deal with buying a home. And check, like I said, check this link out above. This video right there I made is going to tell you all about credit scores and what you can do if your credit score needs some improving. In terms of a VA loan, there's a credit score requirement that you need 580 in your credit score. And in reality, if your credit score is between about 580 and 640, it's possible that the lender might put what's called an overlay on there. And what's that mean? Well, that means, you might go to a lender and you've got a credit score around 580 and you're excited about getting approved, and they tell you, that because you have a low credit score, they're actually going to charge you a higher interest rate than, if your credit score was above 640. That's basically what an overlay is. But, separate from that, you should try to find, that's why you want to use a lender specialist. Find someone, generally speaking, VA loans have very competitive, good interest rates. They're going to give you a low interest rate, as part of the benefit of being a veteran. So you should have a lower interest rate, no matter what your credit score is. But basically, if your credit score is under 580, you're going to have a really hard time getting approved for a VA loan. And if it's between 580 and 640, you still may have a hard time, and they're going to do what they call a manual underwriting. And so what's that all about? What's that mean? Well, when you go to apply for a loan and they process all your information, your credit score, how much you're willing to put down, they look at your income, your debts, and all those things. That there's a lot of that that's automated, like someone will just enter your information in the computer, and then it'll be processed, and then they'll tell you, if you can be approved, and if you are, that's what underwriting a loan means, is that they're going to give you the loan. But in the case of a VA loan, if you have a low credit score, instead of going through the automated system, someone's actually going to do it manually. So they're basically going to take your file, and they're going to kind of hand pick every single item in your file. It's not really like an audit, but you could think of it in a similar way in terms of just having a lower credit score. It doesn't mean that you can't be approved, but it does mean that it's a longer, more difficult process to get approved, as opposed to if you had a high credit score. So if you have a low credit score, and you're trying to get a VA loan, it's not 100% guarantee that they're going to approve you. Especially if your credit score is under 580, it's going to be really difficult. And if you have a credit score between 500 and 580, you might actually be better getting an FHA loan, because you can get an FHA loan from your credit score from 500 to 580. And if you want to find more about that, check the link above where I go into FHA loans and what that's all about. Okay, so that's the basic deal with the credit score and VA loans. And the next major area and requirement is what they call a debt to income ratio. What's all that about? Well, it's like what it sounds like. A debt to income ratio is when you go to a lender, they process your application, they're basically going to say, well, how much money do you have coming in every month? That's your income. And how many debts, how much money is going out in debts. And in that, we're going to include this loan that you want to get. So what they do is they say, assuming we were to give you this loan, which would be, let's say it's going to be $1,000 a month if we give it to you. And then in addition to that, you have an additional, $500 a month of other debts, maybe a car payment, student loan, credit cards, or, all that kind of stuff. Then, that's going to take you to a total of $1,500 a month. So how much is your income? Your income, your income is $4,000 a month. Okay, so that's really good. That means that your debt to income is way less than 50% even. And the magic number they're looking for in a VA loan is 41%. So just to use round numbers, let's say you had a monthly income of $10,000 a month. They don't want all your debts, which would include the loan that they're about to give you, plus any car payments, credit cards, student loans, or anything of that nature. They don't want that to be more than $4,100 a month. That's what means they want a debt to income ratio of 41% or less. However, having said that, the VA, the Department of Veteran Affairs and VA loans are known to be very kind of lax in this regard. So, I've even heard it said from other realtors that they had someone who had a DTI, debt to income ratio of 67%, who was still approved for a VA loan. So even though technically in writing you have to have a debt to income ratio of 41% or under, if it's over that, you should still go through ahead in the process. There's a good chance they're going to waive that condition. Like I said, I know of someone that got someone approved with a 67% DTI. So just think about that, and now that's not a guarantee, of course, but I'm just saying, continue with the process, even if your debt to income ratio is higher than 41%. So that's another requirement. And then, a couple of other things with VA loans you might have heard is, one is that the appraisals are really kind of, intense and much more involved than a normal appraisal when you get, say, a conventional loan or an FHA loan, and that's actually true. So, an appraisal, say in a conventional loan, is, if you're getting a loan for $380,000 for a $400,000 home, and you're coming up with an extra $20,000, but the appraisal says this home's actually going to be coming in at $378, that's what we value the home for, then that means, there's appraisal gap. That means the bank's only going to loan you that $378. If the appraiser says the home value is at $378, not $380, then the bank's going to say we're going to lend you up to $378. That's basically what a normal appraisal is. The appraiser might come back and say, yeah, the home's valued at $400 or $390 or whatever it is. That's basically, appraisals are just someone professionally making an estimate of what the value of the property is. But in a VA loan, it's the same, but it's a little more involved. And the way it's a little more involved is, not only do they appraise the property saying this property is worth, XYZ dollars, it's worth 180, 200 or whatever they estimate that it's worth. They also, it's not technically an inspection, but it's kind of like a mini inspection. So they'll go through, and if there's any major problems, like there's, cracked paint all over the place, or there's an obvious issue with the plumbing or the roofing, or something major that's clearly present, then they're going to report that in the appraisal. And it doesn't mean that you may not be able to purchase that home, but it's a little more strict. The guidelines are, they're going to be checking the place out to make sure it's good, it's a habitable home for you to dwell in. So they're a little more strict. Like I said, it's not an inspection, and even after a VA appraisal, you still should get, and you actually need to get, an inspection. That's part of the process. But you might have heard that about VA appraisals. So there's a note about that. And then another couple of items that's important to talk about VA loans, and one that's possibly, you could say, is a con or a negative aspect, is that, like FHA loans, VA loans, it's a government-backed loan, you're only allowed to use that for your place of primary residence. It's not as an investment property. So if you already have a home, or if you don't have one and you want to buy a property and you want to use it, say, for a rental, you want to buy that property and therefore using it as an investment, and not going to live in it, you can't do that with a VA loan. You have to buy that home and live in it. Having said that, people often say, well, how long do I have to live in it? You know, is it possible for me after some period of time, after I've lived in it, I bought it to rent it out? And the answer to that question is yes, you can. The time period is usually for about a year or so. But just know that when you're going in to buy a property with a VA loan, it must be for a primary residence. So that's another factor right there, which I experienced recently. Have a client that's wanting to buy a condo. But you know, condos come into a different category when you're dealing with either FHA or VA loans. So in terms of, what do I mean by that? Well, they have to be approved for that type of financing. That's different, say, to a single family home. A single family home, no matter where it is, a single family residence, you can buy, it's always going to qualify, you know, as a possible purchase for a VA loan or an FHA loan. But that's not true with condos. If you want to buy a condo with a VA loan, you're going to have to see if the condos in that condo complex, in that subdivision area, can be eligible for VA loans. Sometimes they're not. So that's kind of a stipulation that's worth mentioning if you're looking to purchase a condo. And that's kind of important too. Loans that's worth mentioning is in a tight market where it's a seller's market, which it has been recently. Now we're shifting to more of a buyer's market. But oftentimes, you know, I hear people say, you know, I was trying to get VA financing and it got rejected. And they took, you know, either cash or a conventional loan. That often cash and conventional loans are preferred over a VA loan, and that can be true in certain circumstances. And a lot of that is, sometimes it's often a matter of perception, and it's often related to the down payment. So if a seller is looking at 10 different offers on their home, something that it doesn't really mean that the people are qualified differently, but what they often do is look at the amount of down payment. So one offer, someone's putting down $100,000 on the home, and on the next offer, like a VA loan, they're putting 0% down. And so the sellers, you know, the perception is, hey, that person putting the $100,000 down is much more serious. They're probably better qualified to purchase the home. So we'll go with that offer rather than the VA loan where they're putting 0% down. But that may not even be the case. You know, the person putting the $100,000 down might be leveraged to the hilt. They might have a borderline credit score, which means maybe why they're using a lot more cash. And the VA loan offer, that might be a really well qualified person. So the perception may not match reality, but it's just worth mentioning that, you know, for a seller, sometimes perception is reality. So, you know, that can be a downside of using a VA loan in a seller's market. But now we're shifting to more of a buyer's market. So, you know, there's not so many buyers out there, so sellers are more willing to take VA financing and FHA financing. Whereas, you know, when everyone's trying to buy your house and you're the seller, you know, what you obviously tend to do is you're going to take the offer at the best price. Maybe the person who's putting the most down, they look the best qualified, and you're going to give you the best terms. And if you want to find more about that, hey, check the link above. I go into, you know, what's involved in a seller, you know, wanting to choose your offer. What makes your offer stand out? So, you know, check that link out above. It's going to have some really good, useful information for you. But that is an important point to mention about a VA loan. But by no means does it mean VA loans are not accepted. They can be. And a lot of it depends on market conditions. Market conditions are changing more to a buyer's market now, so it's more favorable for VA loans. I hope this has been helpful, and you know, you've got some good information out of this. And hey, please leave me a comment. I really do enjoy it when you leave me comments. Leave a comment below. Maybe I'll make a video if you have a good question, or I'll try to answer your question. And you know, check the links below as well. In the links below, I have, you know, links to other, you know, videos that might be helpful. I also have, if you want to contact me personally, you know, you want to get a referral to a good lender, or if you're in the Las Vegas market and you know you want to reach out to me to help you with a purchase or selling, hey, please feel free to reach out to me. But mostly these videos are less about that than education, you know, giving you good information. So if you found any of this information useful and helpful, hey, do me a favor, smash that like button, you know, hit the subscribe button to stay tuned for more videos. Thanks for watching this video, and stay tuned for the next one.